What is going on, guys? Good afternoon. It's your favorite mortgage lender, Abdel Kawatmi, Got Mortgages, coming to us live on a Monday. We are going to dive into everything that we went through last week. What is going to be the expectation heading into what is a super, super important week with the Fed meeting, right? We saw some updates just last week when we got CPI numbers and PPI numbers. We're going to dive into what that basically means. But the first thing I want to talk about is the economy slowly starting to really slow down, right? And it's important for us to think of this stuff because there's so many different things that we need to keep an eye out for. We've talked about inflation, we've talked about employment, but now we're starting to get another what I say curveball in the mix, which is really just in terms of what is happening when it comes to international policy along with domestic policy, right? So, starting out from the top, when we take a look at inflation from the consumer level, this was based on the CPI report. We saw that the headline number came in below expectation at 2.8%. Core came in relatively flat at 3.1%. We saw a huge surge just the past month, right? Everybody was talking about these damn chickens, where inflation really skyrocketed in January. February saw a lot more of an improvement in terms of that data, and which obviously brought the forecast below. Headline rose just 0.2%, which is great, while we also saw revisions from the prior report. Now, the shelter component is the important thing, right? Shelter component showed that 35% of the CPI on the headline and 44% of the core really held such a significant weight. Now, the year over year figure, though, continues to remain high according to many different data resources. And again, it shows that the CPI report is slowly catching up with what we need it to do when we talk about real time data points. Now, when we look at wholesale inflation, which is on the producer price index report, that again showed it fairly stable, going from a 3.7 to 3.2%. A big chunk of that drop was from energy prices. If we took out food and energy, it actually dropped 0.1%. Again, all below expectations, where the year over year on the core dropped to 3.4%. Now, it's important for us to look at because the producer price index has some key components of the PCE report, personal consumption expenditure, which we'll get at the end of the month. Now, although the overall producer price index report came in really showing those cooler things, there were some significant increases in healthcare, and those healthcare changes could potentially show at the end of this week that PCE might come in slightly higher than expectations or really help mitigate some of those increases, right? Now, job openings. We did see, if you guys remember, I spoke last week, the JOLTS report, job opening and labor turnovers, which came out, which was really interesting to come out during, those times of the job reports. But we saw again a significant decrease in December. Job openings rose in January from 7.5 to 7.7, which is great, right? But the increase again was fairly notable with retail and finance. So although there was increases in jobs, they were specifically geared towards two service industries. Now, on the continuing jobless claims, we'll continue to see again the claims remain high, which means that once you're let go, it's still having a hard time for consumers to acquire an employment after, right? So it dropped by almost 2,000, really showing that 220,000 for the last week, remaining fairly stable. And then, like I said, on the continuing jobless claims, we're still at 1.87 million, really kind of hovering high as to where the highest numbers are at. New unemployment claims, once again, are at the historically low levels. And then, like I had said, we're continuing to see obviously a lot of changes, really on a week to week basis when it comes to job openings and labor turnovers, right? So, again, what is happening this week? We're going to get the Federal Reserve meeting, which is going to be the main focal point for this week. Usually comes out with the results on Wednesday with their monetary policy and their press conference. We'll also get a couple of key components in between. We saw builder confidence actually come in today, which we'll actually discuss how that essentially came in a few moments. Construction data also at the same time showed with existing home sales on Thursday, and then retail sales reported. We'll also see that right now. And we'll also see just next on Thursday, just continuing jobless claims as we get them on a weekly basis. Okay. So, a lot of different things that we really need to make sure that we monitor because there's just so many components for this inflation data that is starting to impact truly the market, right? And we can kind of see here if we take a look at interest rates, Again, a lot of different mixed feelings, not too much changes today with the mixed retail sales numbers, which we'll look at momentarily. But if we can kind of take a look at since November of 2024 to now, we've been really teetering from anywhere from, I would say, from 7.2% to 6.7%, kind of really bouncing between that 0.5% mark. As you can kind of see here, pretty much since the 27th, over the last really 3 weeks, interest rates have been going down and going up significantly. As you could see here, on the 10th, it dropped zero point 0.7, then it jumped up zero point 0.7, jumped up zero point 0.3, dropped zero point 0.4, jumped up zero point 0.3, dropped 0.1. So market is kind of really balancing, trying to figure out. I think the key component is truly going to be what is going to happen, during the Federal Reserve Week, which if we can kind of take a look at here, some of the key things that I want us to keep an eye on for retail sales numbers again in February only jumped up 0.2%, weaker than the expectation of zero point 0.6, which again is great. Showing more downward revisions. Actually, the report from prior month, can't believe how far they're off, was dropped by almost 0.9%. Core retail actually showed a jump up of 1%, which basically erased some of the positive data. Now we're going to kind of see again how this is all going to play out with the Fed. There's going to be a lot of different insights again when we take a look at specifically the retail sales and how all that kind of comes into fruition. Now, when we take a look at Empire State Manufacturing Index, once again, it dropped by negative 20, showing another decline when we talk about just the business market when it comes to manufacturing and stuff. And this is important for us to look at, right? Obviously, the stock market, it's going through a little bit of a correction. It's still relatively considered healthy, even with us considering that we're doing a lot of what I say irresponsible spending, right? So a lot of different things for us to consider. Like I had mentioned, tomorrow we'll get housing starts and permits, mortgage applications on Wednesday,